To understand monetary policy, inflation, recession, and economic cycles of tightening and easing in times of stress, we have to examine the usage of bonds by the federal central banks and their change in Fed funds interest rates. After 1971, the Feds effectively created their own tools, as they call it, to manipulate the global markets at home and abroad, since the number one reserve currency is the United States dollar, thereby creating a fiat system of money that represents the debt of the government's spending, financing, and allocations. The usage of interest rates, taxes, and bond issuance are tools central bankers use to influence the economy, whether it is hiking or cutting rates, like in 2020. The pandemic caused an immediate drop of the Fed funds rates to zero and even negative rates that created what is considered a very loose monetary policy, where money is viewed as cheap and even free. Stocks and other assets pummeled and reached new record highs every other week, because large loans came with very low interest and are easy to acquire. In effect, quantitative easing, or QE for short, was achieved in the economy to provide a short-term boost in spending of goods and services. How did they do this? Well, by buying securities, namely treasury bonds and other assets that would provide relief to the big institutions under financial stress, or mortgage-backed securities, like in the Great Recession in 2008 to 2009. You see, when the federal bankers, the ones who control our money supply, buy billions worth of treasury bonds and other fixed assets, this action provides a liquidity beginning from the big banks that passes on to consumers and businesses. Bonds have two characteristics to focus on: the bond price and the interest rate attached to it. When its prices move up, its rates go down. And when the Feds are buying up these types of assets in the billions, creating a forced demand, bond prices move up and its rates go down. This is key in affecting the overall economy. This is an example of cutting rates like during the pandemic in 2020. Now we know why the Fed may buy assets, but let's not forget that they have the ability to issue new bonds.